Right now, we have Bitcoin potentially aiming to get that breakout above our resistance level at $17,400. And if we take a look at where we are with a slightly more zoomed out perspective, it is pretty clear to see, ladies and gents, that we are penetrating that green line, potentially entering what I would be calling a large liquidity gap. And obviously, that is one of those situations where, if you're subscribed to the YouTube channel, you're going to know very well, where in these liquidity gaps, we can tend to fill these price levels very, very quickly. We had a great example of it on the way up, and an even greater example of it on the way down because it happened consecutively, and I'm definitely expecting something similar to happen right now. Now, we're not quite above the line. I mean, we're basically just on it. We're a little bit above, but hardly. I mean, just 0.14% above. Ideally, I want to see a bigger breakout, right? I want to see that Bitcoin is able to get 1% above the line. That to me is going to be quite a real, kind of sign that this could be something legitimate. I'm actually going to leave this as a dotted line because I think that would be quite representative of what this means, where it's not really a real resistance level, but it's something where if we cross, we could be looking at something much more exciting happening. So we're showing the right sign here. If we're able to get above this, I think we could spike up very, very quickly. At least, like I said in the previous video, again, those of you that are regular viewers of this YouTube channel are going to know very well. What I said in the last video is that if we do end up getting that breakout, I think we could at least hit this high, which would put us at 18,400. But I think more likely, especially because we already got there before, and because we've consolidated for a while, and because we've had a pullback after actually setting this high, I think more likely we're going to be able to rally a little bit higher. And I think what's also important to keep in mind is that if we do manage to rally up a little bit higher, we would still be in a downtrend. This is also something that I covered in the last YouTube video. So again, guys, really time sensitive content. I want you guys to make sure that if you find this content useful, that you are engaging with this content, showing YouTube that you like this content by hitting up the like button, subscribing, clicking the bell. Not only will make me happy, but it will make sure that you get this content when it is published, because obviously that's when it's most useful to watch. But if we do end up kind of rallying up a little bit higher, we'd still be in this kind of ascending channel pattern, even if we punch in a new higher high at about $19,000. And crucially, and if I actually just drop a line right here to show you what this looks like, you'll see that this is a very important level. If I just zoom out very quickly just to make this point, you can see that this is where a lot of our resistance is potentially going to be at, and that's just purely because we had a lot of bounces off this level, right? So around this level, near this level, on this level, we've had a lot of key bounces, but we've never been able to test it as resistance so far. So I think that this could be our chance to do that, and I wouldn't be particularly worried if we do, because it would still mean at the end of the day that we are rallying higher and punching in a new higher high. But the key thing that I want you to keep in mind is that if you are a bear, which would still make a lot of sense, ladies and gents, I mean, we are still in the same market situation overall, right? We're punching a little bit higher, but when we zoom out, this is completely insignificant price action overall, right? It's really not telling us anything particularly useful. The reason that I'm mentioning all of this is that if we do manage to rise up a little bit higher, we would still be in quite a conventional bearish pattern that could break down. And that is what I want you guys to keep in mind. If we start to see things like the fear and greed index shooting up, showing us quite high signs, which fortunately we're not seeing yet. But if we do start to see something like that, if we start to see that people are getting very happy and they're starting to, the retailers looking to buy Bitcoin and so on, and we're just getting a flood of excitement, then this could turn out to be one of your typical situations where the market is actually in quite a bad situation. The market is actually in quite a dangerous situation, but people buy the hype, they let the price ride up a little bit higher, and then bam, they get screwed over and the price drops back down again. That, what I've just described right there in the last kind of 20 seconds, is extremely, extremely typical of the financial markets, especially in circumstances like this. So I really want to make sure that you guys are very, very aware of this, because if you're not, you will get caught out on the same hype trains as well. I'm not saying that you should, be completely skeptical of everything you see, although that's generally, I think, going to be somewhat of a good idea. But what I am certainly saying is that a lot of people are going to be buying the hype on many of these rallies. And of course, that's exactly what happened on pretty much every rally we've seen so far. Will it be the same? I don't know. Obviously, that's potentially the $1 million question. But you guys know the deal. For me, I am a little bit more optimistic than others. I think that we've seen a really, really nice rally so far. What I also like is that if we zoom in just before this breakout, we had a good amount of consolidation. We didn't have anything particularly crazy, but we actually did exactly what I said would be most likely in yesterday's video, where I was I point to the wrong direction. I should be pointing that way. In yesterday's video, where I was talking about how I don't necessarily think that Bitcoin is going to get a pullback, because we don't really, it's not super clean where we could get a pullback. This green box itself is probably the only place we could get a pullback. But what I do think, and I said this yesterday, you can go back and watch it, what I do think is that we could be in a situation where we just kind of trade sideways a little bit. And you know what? That's quite largely what Bitcoin has done. If you take a look at this on the 8-hour time frame, for example, from this candle and onwards, we had a little bit of a pullback. We traded sideways after that pullback. We moved up, but for the most part, we were trading within, this kind of circle, let's say, which stretches between 17,100 and 17,300, which, when I quantify it, it really isn't that much of a, it's not that big of a price range. This is what, like 1.5% of price action? Oh, not even. It's just 1% of price action right here. So it's really not that significant overall. And I think that's important to keep in mind because it does show us that we have had some sort of a trend break. Is it enough? I don't think so. I'm going to show you why. If we look at things like the EMA ribbon, we still haven't had a chance to catch up to them. The EMA ribbon hasn't moved up enough. We haven't dipped down into it enough. So unfortunately, that could be a bad sign for Bitcoin. I'm going to wait and see how this plays out. I don't want to draw huge conclusions off this data yet, but I would have liked to see a slightly deeper pullback. If we take a look at this on the hourly time frame, we did get that pullback into the EMA ribbon, and when we have a nice spread like over here and like over here and like over here, the EMA ribbon is very, very useful. Of course, the EMA ribbon is not useful in circumstances like this because we don't have a spread. If you don't know what a spread is, that's basically where you can individually see each line. You can't individually see each line over here, which means that we just the data hasn't been trending enough to show us anything significant. You need to really understand how to use indicators like this before you actually do. I know this is a very popular indicator in this space. I've been using it personally since 2018, which is now 5 years ago. So I love this indicator. But what I did in my video, which you can type into YouTube, you can type this into YouTube to watch my video on the EMA ribbon. What I did is I actually explained how I like to use these, and what I think makes them particularly significant and how to use them safely. This video is actually part of my wider 𝗬𝗙𝐺 Academy course, which you can get by following these steps on screen right here. If you're interested in learning absolutely everything I know about trading analysis from A to Z, along with just kind of jumping inside of the VIP group. The other cool thing that I want to show you guys is that while we are entering potentially a very, very juicy range with, quite a big, potential upside, right? I mean, let's just measure this real quick from where we are right now to this level right here. That's a 6.5% move with, something like 4, 5, 10x leverage even, with 5x leverage, you're looking at a 30% profit. With 10x leverage, you're looking at like a 60% profit. These kind of numbers, very much exciting. These are great opportunities to get in on the market, and we've actually got a huge bonus on Bybit right here of $5,000. Now, apparently there's still the 30K bonus running, but I don't see where that is, but they have told me that the 30K bonus is running. Either way, depending on how much money you deposit and then how much you trade with on Bybit, you're going to be getting this cash deposited for free into your account, which means that you can take trading opportunities that you're not so sure of or whatever. It really doesn't matter, and you can take it risk-free. It's basically like trading a demo account, but because this money is given to you for free, if you get to make any profits with that money, if you make any profits with, basically this demo money, you can keep those profits. But if you don't, it was never your cash to begin with. You're not actually risking any of your own money. So I think that's a really, really cool offer. Definitely take advantage of it if that's something that you think you'd be interested in. And Prime XBT right here is also offering you something very similar, but their bonus is actually going up to $7,000. And the cool thing about Prime XBT is that you can trade all of these traditional finance markets. You've got indices like the S&P 500, commodities like gold, silver, and oil, and a lot of the big Forex pairs as well, in addition to crypto. And you can trade all of this just with a Bitcoin deposit. It is a very, very cool exchange. It's one of my favorites in the whole space because they're very uniquely positioned with the markets that they allow you to trade. So well worth checking out if you think that this would be something interesting to you. But moving back to the market right here with this EMA ribbon, I think that this is a good sign on the 1 hour time frame. Like I said, I would have liked to see something a little bit substantial on the 4 hour time frame. We don't quite have that yet. If we take a look at where our Ichimoku clouds are, specifically on the 4 hour, but then zooming out onto the 1 day, we're going to start to see some very, very interesting signs here. So taking a look at this on the 4 hour time frame, just waiting for it to load, we did basically break out of this resistance cloud, which is great news. Very, very good news indeed. We are building support a little bit lower now, which means that if we do manage to rally up, let's say towards the top of this range and then have a pullback, we might be able to expect that Ichimoku cloud to give us some support towards the end of the month. I'm not saying that that's how the price is going to move, but if it does move like that, which would actually look pretty sensible, that would be an ideal situation for Bitcoin. If we zoom out a little bit further though and take a look at this on the daily time frame, take a look at this. This is that same window of opportunity that I was talking to you guys about in yesterday's video. We are doing very well, I think, with this range right here, and so I'm definitely liking what I'm seeing. To me, this is a good sign showing me that we've got this window of opportunity and we could be ready to move a little bit higher because this resistance is waning off and actually moving a little bit higher. So I think that the market could have a nice opportunity to potentially rise up a little bit higher, and that is something that I'm going to be watching out for as well. So I'm getting a lot of phone calls right now. So If this is something that could be working in our favor, I think that's really, really good, because it does show us that resistance, according to this cloud, could be starting at 17.7. I'm not really too worried about it until we get up to this horizontal resistance, or at least to this high. I know that the Ichimoku cloud starts here, and I probably should be heeding its warning in all honesty. But if we take a look at how we interacted with this level before, we basically only hit the resistance level up here, and then we got a rejection. I think that lined up pretty closely with my horizontal level anyway. We were only 1% away from it, which is close enough to get that rejection, I would say. And so I'm going to be looking to see how we continue to interact with these price levels. Now, if we manage to move down, that's going to mean two things, in my opinion. Number one, that could mean that we're actually in some sort of a rising channel, some sort of a, something a little bit like this, which is generally going to be a bearish pattern, but for Bitcoin, it tends to work out really well. In traditional finance markets, this is a very bad sign, because it basically shows you that you've been moving up with a lot of momentum before. You've lost that momentum, so you're not moving up as quickly. You can see that the gradient that we're moving up is a little bit less steep, right? So if I draw what that looks like, well, I can just do it like this. We've moved up like this, and now we're moving up a little bit slower. And you compare, this is very easy to eyeball. We're just not moving up as quickly as we were, and this is potentially a display of momentum, right? So if momentum is shifting like that, we could be ready to move downwards. For Bitcoin, that's not what it means. For Bitcoin, at least in my opinion, for Bitcoin, it generally means that, in my opinion, that we're actually just too excited and we're not able to cool off, and so the market has to pump up. We have a lot of examples of this. I don't know if we've shown it recently. It's hard to point out. See, here's an example where it doesn't work out in Bitcoin's favor, although this is within the downtrend, so it's a slightly different circumstance. Bitcoin has done this a lot. It's hard to find an example right now, perhaps not recently, but it is a key characteristic of Bitcoin and has been for many, many years, so this is something that I'd be watching out for. However, if we do end up dropping down, I wouldn't want to see us drop down lower than this level, because that would invalidate this rising channel if we did drop lower, and if we did drop lower, that would then mean that we're probably setting some sort of a top pattern, which would mean, and this is where it gets potentially quite scary, this would mean that after a very long time of basically being inactive, that we've set in a high and we're setting in a new lower high, which could mean that we're also ready to set a new lower low. So that is something that I'd be watching out for if I was a bear in this market right now. I think that it would make a lot of sense. It's basically exactly the chart pattern that Bitcoin has been producing over the last month. If we take a look at what's been happening over here, we saw very, very similar circumstances where we punched in a high, we had a very promising trend, but punched in another lower high, we couldn't get above it. We had an even more promising trend right here, and of course this was quite unique to crypto, because the rest of the markets that are somewhat tied to crypto, like the S&P 500, actually continue to perform very, very well. But we had the FTX drama, we had the contagion of that affecting the market back here. So unfortunately Bitcoin and so on couldn't continue to rise up, but the end result nonetheless is that we punched in a new lower high, which did end up tumbling the market a little bit lower. So that is something that I'm going to be continuing to watch out for as well. So there you go, a quick one right here. I hope you have enjoyed this one. If you have, you know exactly what to do. Go ahead and check out the links in the description down below to get your free cash bonuses on Bybit and Prime XBT as well. Great offers, very much worth checking out. If you have enjoyed this one, you know exactly what to do. Hit up the like, subscribe, tick the bell, check out these links on screen to join 𝗬𝗢𝗪 VIP, get inside of my 𝗬𝗢𝗪 Academy as well. Super quick one, and I'll see you all in the next one. Cheers.